cap buyer becomes an imbalance seller's pending area. Where did the sell come from? The imbalanced seller's pending area. So yet again, it's just about keeping your charts up to date. You start to recognize it, you start noticing it. It doesn't mean you will be selling it, it means at least you know that it's there. All right, that's all it is. All you know is that that level exists, and it's something that you're now paying attention to as a possible sell, developing away from that price if you like it enough. An imbalance cap buyer becomes an imbalance seller's pending. We bring the level up to about halfway through the balance area and we draw a box. If you didn't draw the box, you're still way behind the curve, guys, way behind the curve. If you didn't even know about it, you're likewise way behind the curve. You must know these things. You check your valuations. The valuation looks bullish here, but on a macro chart basis, is it bullish? What do you think? On a macro chart basis, is that bullish? No, it's actually the opposite. It's actually really still quite bearish, isn't it, on an uptick basis? That's why we called $77 yesterday as well as $77 a day before, because this is not a bullish looking marketplace. This has still got a lot of elements of supply driven markets. So we've got an idea that this still looks on the face of it to be bullish on upticks at top edges. Bullish on upticks at top edges. So you can see it start to drive up into the top edge. What are we going to be watching for? Well, pretty much anything. We're watching for dollar. We're watching for CAD yen starting to sell off. Did CAD yen sell off? We got a sizable reversal on CAD yen after the next retest, didn't we? So we started to see the retests coming into those areas, and that would have been one reason to start selling the new highs. Failed auction, and a second reason to sell the new highs. When we look at the overall shape of the spreads that we were talking about this morning, did we get pink over blue, yes or no? Well, we had pink below blue, pink below blue, pink below blue, pink below blue, but then with the acceleration here, you'll probably be able to recognize it, not on this candle, which took away this opportunity to go short. But on the pink over blue here, you'll see that the blue line actually starts going flat and the pink line accelerates for the first time. The Brent oil spreads is starting to suggest a bear's sell side trade. And that resulted in a drive down. If we take it off the 1 minute chart to recognize it on a 5 minute chart to recognize it on a 1 minute chart, you'll start to recognize some of these little elements. You can see it as it happened here. Not on this candle, but on this candle. You started to see the pink line going up, the blue line starting to flatten out a little bit, and then you see the pink line now lagging behind price, giving you a strong suggestion that this is gone sell side. This is definitely gone sell side. And you see there's a couple of little opportunities to sell into these upticks. Remember we talked about these passive trade entries? There was one right there for a possible passive sell, and there was another one there for another possible passive sell. Bit of value driving down. Another one there for a passive sell. Relatively straightforward stuff. Remember, passive sells when this diverges. It's not an aggressive sell, passive sell. You'd be able to ride that market south side very, very nicely indeed. And then we get a bit of a tie-in with value. The value seems to just completely tie in into the bottom edges here as it swings on the reversal. Nice outcome. Looks like red below blue at the moment, so it still looks like it's a little bit of an upside until we see that change on a macro chart basis. So bidding dips at the moment would be the reasonable proposition. And you can see that buy on dips there just coming in as we spoke about it. Price downticked and dipped, and the buyer came in and pushed the price straight back up again. It's not a trade I'd be taking, but it just gives you an idea that buying on dips seems to be what the process is at this present moment. So it's worked out pretty good. We'll see how it evolves. The gold buy trade, well, it's not changed actually, interestingly enough. The gold buy trade is still the same gold buy trade. It hasn't actually changed. So with this cap seller, but we didn't retest into that. There was a very strong bullish value, and I still see very strong bullish value. I don't see any change to that bullish value on the charts. In terms of actual value itself, I do see some bulls on pullbacks still. If you look at the blue line from there to there, for example, against this close, you'll see that against that closing price there, you were getting some discounts to buy into. The bids that came in on this candle might have given you the confidence to go ahead and take that, bearing in mind this is the RGL, of course, from yesterday, and therefore buy side above here would be quite an interesting trade area. So obviously there's your bids coming in there. You might have liked it enough. Again, this is a 5-minute chart, so you always have the opportunity to drill down into a 1-minute chart to have a look. And when you drill down into a 1-minute chart, what we're looking for is yellow down, blue up. Let's take a look and see if we'd yellow down, blue up. And you can start to see it happening here, can't you? You know, the blue line's still quite bearish, but you can start to recognize the yellow line is now accelerating past a divergent blue line here. And that's what you're looking for that trade, aren't you? You're starting to look for that story into that bottom edge. And whether you liked it on the way down actually wouldn't have made an awful lot of difference on this occasion, because you saw it on the way back up on that spinner. And that gave you a nice way into that buy trade for that break into top edges. Now there's a challenge here. You can see a very obvious challenge. Yellow line into highs is now trading at a premium to the blue line. However, the blue line is now making higher highs, so I still prefer buying dips. But obviously when that happens there, that is a very obvious profit take candle. So whilst it's not a sell, it is a definite profit take, and you'll be looking to bid dips for a continuation buy opportunity. Nice trades, nice little bit of outcome, yeah. Top edge DAX is obviously rolled, short-term bullish, it's short-ish term bearish top line for the DAX sellers, and that's worked out quite nicely. You can see here short-term bulls, but the macro against a macro level very definitely bearish, and this is a macro level. It is day high, of course, and being day high, we count that as a macro level, as you would imagine. Not exactly too earth-shatteringly difficult stuff to remember there. So day highs, macro value divergence, sell side top edge opportunities. So with a sell side top edge opportunity, what are we going to look for? We're going to look for a prem divergence. So we look for that prem divergence. Did we see it? Well, coming into the top edge with an uptick in the prem and then a divergence in the very next candle. We can't get much better than that. The challenge, well, there is a challenge. The challenge is, of course, that the prem is starting to get very low in the water, which means that there is a 50-50 chance that it might go higher, which means that you've got to be very, very passive on this sell trade up here. Got to be. You can see another divergence on the next blue candle as well. It's still driving sell side, so at least you've got an edge to sell it. You've got to be careful because it is dropping, it is low, and therefore there is going to be some buy side opportunities. Now, because this is selling at lower edges, this is suggesting that there is a possibility a sell program is coming out into play here. You can see that this has been happening ever since these high prints were put in. You can see that this has been averaging significantly lower than it was before. And for that reason, there is more chance of a sell program breaking the market structure sell side. So that's obviously good news. We can start watching for that to take place, make sure we're leaning against the right information, and we'll get ready for the next top line sell, assuming we start seeing the value driving back down again, because the short-term value is now getting to the point where top line retests are almost an essential with certainty for anybody that's trading this. So we've got to be careful with this trade now. It's one of those ones that's touch and go as to whether it is still a trade. And if you like it, well, good, take it. Bottom edge bonds came back out to play again into that same price as the last time. Value, yeah, not so good. Not so good, I'm afraid, but we did get the 5 cents predictor giving us a bit more confidence to get into the deal and take the shot at the bottom edge. It's the same bottom edge, by the way, as we traded last time. So it's not invisible for everybody. In terms of absolutes, we've got an absolute divergence. That's the only benefit for this whole trade. We've had this absolute divergence literally all morning session so far. You can see that we've started at the highest high here, and it's been kind of drifting ever so slightly lower through that whole phase. suggesting, of course, that bonds should be drifting ever so slightly higher through that whole phase as well. So I quite like the buy. It's not the best one by any means, but it's all right, mate. It's all right. Looking at the crack spread, the absolutes against the tut spread, the one thing we can recognize is the tut spread is trading at a pretty small premium overall to this trade, and that's good news because that means that we're going to get enough sellers coming in on the tut spread. Sellers of the ZT means buyers of the ZN. Buyers of the ZN should push the bond price down, and we can obviously look to try and buy into the ZB on that downtick. Yeah. So when we see that premium coming in and we know that that's going to bring some sellers into that spread trade, then we know that's going to be bullish bonds. And that's exactly what happened. Remember, if you get the idea of that, if you're selling ZT and you're buying ZN, and if you're buying ZN, you know that that's going to be the direction of bonds, well, that means that we should be buying discount bonds. Why? Because if we're selling the tut spread, we should be getting a what? A knob spread steepener, correct? So we should be getting a spread steepener on the back end of the curve. If we're getting a spread steepener on the back end of the curve, how does that trade get traded? Well, it's pretty obvious. People are buying the 10s anyway. So if they're buying the 10s, they're selling the 30s, they're selling the ultras. If they're selling the 30s and the ultras, we should get a discounted price to that spread. We did. That's what we bought. That's the point of the Grail trade, right? So that turned out to be a brilliant trade, nice outcome. And as I said, it wasn't the best entry by any means, but it was still the kind of trade that should be basically straightforward for any bond trader.